Franklin India Feeder, Franklin US Opportunities Fund. When it comes to diversification, investors typically look at investing across asset classes like equity, debt, gold, and real estate. Besides asset classes, one can also diversify across geographies as different countries perform differently under respective macroeconomic scenarios. Another reason why one should invest across geographies is the opportunity to invest in some of the world's largest companies like Google, IBM, Microsoft, Facebook, and Apple, which may not be otherwise operationally simple to purchase as they are listed only on global stock exchanges. The best part is that one need not use foreign currency but can make the investment in Indian rupees. Why invest in companies across the globe? It is important to diversify across countries as each country has its own strength and specialization. For example, US companies are known for innovation like Apple, Facebook, and Google. German companies are known for their engineering talent like Mercedes-Benz, BMW, Siemens, and Audi. Russian companies are famous for oil and energy like Gazprom and Rosneft. China is known for its low-cost manufacturing and India for its low-cost services. If you feel that all markets rise and fall at the same time, you are wrong. The chart shows that India topped in 4 out of the past 8 years, while it was far below in the other 4 years. The US market topped in 4 out of the past 8 years, when Indian markets were struggling. Thus, by investing in other geographies, one can mitigate the risk of a fall in Indian markets. Hence, it is prudent to diversify globally so that any such fall in India is cushioned by gains from other markets. As the Indian currency depreciates, our imports get costlier, especially the cost of fuel, which is a major part of our import costs. At a personal level, foreign travel and foreign education also gets costlier. Investing in global assets via international funds helps to cushion this local currency depreciation. Let's look at an example to explain this better. Let's say a foreign fund had an NAV of $1 and the value of the US dollar was 50 rupees per US dollar. If you had invested 1,000 rupees in a foreign fund 5 years ago, this would be worth 20 US dollars and you would get 20 units of the fund at $1 per unit. Assume that the US market did not change over the last 5 years. The value of 20 units will continue to be 20 US dollars. However, the same when converted to Indian rupees will provide appreciation depending upon the value of the rupee. If the current value of the Indian rupee is 70 rupees per US dollar, so in rupee terms, the value of the units is 70 into 20, that is 1400. So if you had invested 1,000 rupees in the fund 5 years ago, you receive a 40% appreciation because the rupee has depreciated, even though the US market has not appreciated. Any positive market movement will provide further appreciation to the investor. Thus, the fund provides dual benefit from rupee depreciation and market appreciation. What is Franklin India Feeder, Franklin US Opportunities Fund? The first fund we launched in the offshore feeder category of funds. The parent fund, Franklin US Opportunities Fund, was launched on April 3, 2000 and has a track record of over 16 years. This is a diversified equity fund of funds scheme that gives Indian investors an opportunity to invest in US companies through the Franklin US Opportunities Fund. To put it simply, a fund of funds concept is a combination of mutual funds offered as a single fund. It does not hold securities in its portfolio, but other funds that have been chosen as per its investment objective. These funds can be either debt or equity funds, depending upon the objective. Fund of funds carry a single NAV. They are classified as debt funds for tax purposes and have a higher expense structure than regular funds. This fund provides investors with exposure to the US economy by investing in the leading growth companies across industries and market caps. It identifies companies with long-term revenue growth, superior profitability, and sustainable and meaningful competitive advantages, along with firms poised to benefit from favorable trends. Ideal investment horizon. Since the Franklin India feeder, Franklin US Opportunities Fund is an equity-oriented fund, we recommend an investment horizon of 5 years or more. Equity funds tend to display volatility over shorter time periods. But when one invests for longer periods of time, that volatility factor tends to get negated. Financial goals. Every investment you make must ideally be linked to a financial goal, and this goal could be of varied durations depending upon your investment needs. Offshore funds work well for financial goals where you need to make the payment in US dollars or other foreign currency. By investing in this fund, you negate the impact of the rupee depreciation, if any. The fund could be considered as an investment option if one is planning to build a corpus for his or her child's overseas higher education. Let's look at an example to understand this better. If the cost of US education was 15 lakh rupees in 2008, the same would increase to 27 lakhs in 2015. By investing in Indian markets alone would not have met the corpus, but investment in the US, world or Asia indices would have fetched much more than 27 lakh rupees as seen here. Besides foreign education of your kids, the fund is also well placed as an option to consider while planning for your long-term financial goals, such as a global diversification of one's investment portfolio, a foreign vacation, or an overseas home. Who should invest in this fund? Clearly, those investors who are adequately investing in the local Indian market and have a risk appetite for foreign equity must invest in this fund. Further, those who have goals with foreign currency expenditure like foreign vacations or homes or kids' overseas education. This is a good alternative for someone looking to invest in overseas companies to achieve geographical diversification in their portfolio. Applicable taxation. Let's take a look at the applicable taxation. Liquidity. You can redeem your investments in full or in part on any business day. The redemption amount is normally dispatched within 10 working days from the date of redemption. You would receive the same either as a direct credit in your registered bank account or receive a physical check at your registered mailing address. What more do you need to know? Let's get to know some fund facts of the Franklin India feeder, Franklin US Opportunities Fund. For more information, please feel free to contact your mutual fund distributor or registered investment advisor or log on to franklintempletonindia.com. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.